Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I've always said to you guys, I will be transparent and I'll tell you exactly what I'm doing in my portfolio, and this is one of the reasons I started this whole thing, just to kind of help brothers and sisters out there, to show you what I'm doing, okay, and hopefully in the long run that we can all share our ideas and what we're doing with our money, what companies we invested in terms of Sharia compliance side of things, and at the same time just to be open and transparent. So there is a company that I'm looking at now. I will be adding this company to my portfolio maybe in the next few weeks, okay. Maybe end of February, maybe I might be adding this company. I might wait for a little bit and for the earnings report, but I will definitely be adding this company to my portfolio, this portfolio, and possibly the family portfolio. I'm not sure about that one yet, but I will be adding this company. So I want to talk about the company. I want to give you the overview of what this company is basically does in terms of business side of things. I want to talk about in terms of financials, and then why I'm adding this company to my portfolio in the long run, inshallah. If you like this type of content and you are enjoying the videos, please give the video a like, subscribe to the channel, and then inshallah let me know if you have any questions. Now, the company I'm talking about today is Accenture. This is one of the companies that I have spoken about for a while. What I want to do quickly now is just kind of give you some of the overview, and then I'm going to talk about the financial side of things. This company is one of the S&P 500 companies. I think it has a market cap of $175 billion. It's currently trading $277 per share. And as you can see here, it has a forward PE of about 24. By looking at that, it looks a little bit expensive, okay? But when you look at EPS, it's actually quite good, almost $11.50 for per share, which is very, very good. Now, in terms of momentum right now, the company for the year is actually down 21%. For a year to date, is about 2% up, 2.5%, or let's call it 3%. Last 6 months, okay, so the year to date basically since the beginning of January. So we better off looking at last 6 months. As you can see, last 6 months is actually down almost 9%. And for 1 month, is up about 3%. In the last 5 days, is actually up 1%. The company is not reporting yet, so if you click earnings, you will see the company will be reporting on the 23rd of March 2023. So there's a little bit of time left for this company to report, because they only reported in December, 16th of December last year. Now let's just look at the information I put together. So as I said at the beginning, this company actually works in basically it provides consultant, it provides a strategy for technology side of things. So they go to different companies and they help them basically from their IT side of things. So they are one of the best companies when it comes to that. So they offer things like basically they work with loads of different companies, from communications, from media, technology, financial services, healthcare side of things, public services, consumer products and resources, and so on. So they have loads of customers around the world they work with. Is one of those companies where if you have a business, you potentially will end up with working with this company. If you have customers, if you have a HR, if you have any of those situations, you will be working with this company, because you will need some sort of IT or services from this this company provides. So basically, they are a technology company that is needed in every industry. They currently trading $278 per share. EPS we just seen about $11 give or take. Market cap is $176 billion. So it's quite a huge company if you think about it. And it has a wide economic moat, and it has a beta that's slightly higher than the basically S&P 500. The PE is right now slightly high, but in comparison to the sector, it's not actually that high. Then the forward PE seems a little bit high as well. Based on this, company seems a little bit expensive, and we will see what the analysts are saying right now. 5-year average, okay, basically is about 27. So based on the 5-year average PE, it seems it's basically quite cheap now and going forward as well. Price to free cash flow is only just below 20, which is quite nice to see. In terms of dividend, they have a small dividend of 1.61%. Latest increase was 15%, which is quite nice. 5-year growth rate, basically we're looking about 10%, and they pay you $4.48 for every share of this company that you own. Dividend streak for 17 years, so they have increased this dividend for 17 years, and payout ratio is only 38%, which is nice. Dividend safety, we're looking at 92%, and free cash flow of $8.87 billion right now. So that is very healthy cash that they can use to buy back their own shares, to basically pay off some debt, buy other companies, okay, pay you to the dividends and so on. So they could do a lot with that money. Then you've got free cash flow and yield of 4%. We normally we said about 4, we're looking about 5% or so, but 4% is actually quite good. Like I said in one of the videos recently, 3%, 3.5% is actually quite nice. Basically, if you can get 5 or more, that's absolutely brilliant. But 4%, I will take that any day. Profit margin, we're looking at about 11.3%, operating margins of 15%, return on equity 32%, which is very, very good. Total return in the last 10 years, we're looking at about 15.62%, which is very, very nice as well indeed. Okay, revenue growth, or basically compounding annual growth in the last 5 years for the revenue is 11.5%, which is really nice. Current ratio is way above 1, which is nice. So that means the company has enough current assets to pay off their current liabilities in the next 12 months if they need to. They can liquidate that and basically pay that off their debt and so on. Next year, they expected to grow their earnings about 10%, and then 10% every year after that, which is quite nice. Current price we've already seen is $277. Fair value according to Simply Wall Street is 271. So as you can see, just about 3% overvalued according to them. Morningstar is saying 258. So it's about 8% of premium right now, or overvalued if you like. Price from TipRanks is actually 301, so it's about 8.5% upside, more or less similar when it comes to Seeking Alpha. They probably use the same analysts, these two companies. And then when you look at the Seeking Alpha, they're actually saying it is a buy right now. Okay, so in my opinion, it's you can potentially, like, I'm not saying this is a financial advice, I'm basically, but like I said at the beginning, I will be adding this company InshaAllah into my portfolio at some point in the next, I don't know, month and a half. Okay, and then, like I said, you know, I'm still looking at it, I'm still doing my research and so on, but you will definitely see this company within the next 5 to 6 weeks. By then, hopefully it would come down quite a bit. If I can get it below 250, it will be absolutely amazing. Will that happen? You never know, because a lot of things are happening right now in the market, especially today. Actually, we are getting the Fed basically will tell us today whether they are going to increase the interest rates by 0.5 or 0.25, and what that means for the next one. Are they going to go by to 0.25 and then slow it down afterwards, so start cutting it, or whatever it means basically happens, we will find out a bit more information. So the markets might just jump basically from today if they come out and they're not as hawkish as they were before. So it will be interesting to see, especially for the US. UK, I'm not sure what's going on right now. It's, you know, it's a doom and gloom if you like, but the US could potentially start slowing down in terms of raising that interest rate. Anyway, let's get back to the video. So in terms of the Sharia compliance side of things, we're looking about basically almost 100% when it comes to the business side of things and interest-bearing securities. And this is one of the debt is one of the reasons I'm actually attracted to these companies. I'm sick and tired of companies that are like 20 plus when it comes to interest-bearing debt, and then the stock market goes down, their overall market cap goes down, and then what happens? The interest, basically this goes up. Okay, because the market cap goes down, the debt stays the same, and for that reason the interest-bearing debt goes up, and the company becomes basically not Sharia compliant. So again, it's similar situation with Lowe's and other companies that I own in my portfolio. So I sold Lowe's recently. I've got now another company, VF Corporations, which is exactly in that position. The company's filed, the debt levels wasn't that much, but the stock lost half of its value. For that reason, the debt levels obviously stayed the same, and for that reason it became non-compliant. So yeah, that's one of the reasons I actually like this company. One of the reasons I like technology companies, they don't have a lot of debt, but interest-bearing security is also 3.12, which is very low. Outstanding shares is actually, they have been buying their own shares, which is quite nice. So they're paying 1.6 in terms of dividends, and they're actually buying back their own shares. Amazing, because what happens when companies do this is, if you own one share of their stock, that means is worth more now because they're actually buying it back, right? So there's less shares out there, or shares outstanding. So that for that reason is actually quite nice for investors. Now I copied over this from TipRanks, and as you can see, a lot of these banks, so these are the analysts that work for these banks like Morgan Stanley's and Citibank, Citigroup and so on. And every single one of them is actually saying a buy, apart from these two here, UBS and this company. And as you can see, is about 17%, 29%. And then when you average it out, is basically what we've seen here. And that's why they came to this conclusion that it's actually a buy right now from them. And it is 8.5% upside, if you like. Now, just a couple of more things in terms of revenue. So as you can see, from 2018, they had almost, let's call it $41 billion of revenue. Right now, as we speak, is about 61. So it's gone up quite a bit. Okay, $61.5 billion. They are expecting to grow that to 64.5, then $69 billion in 2023 and 2024. In terms of when we look at the EPS, as you can see, it was growing basically fine. In fact, when we look at the annualized, okay, that's when you will see the beauty of it. 2020, there was a bit of a drop, but 2021 and 2022 has been absolutely fine. And then when you look at the next couple of years, they have beaten the analysts' expectations, and it looks like analysts are expecting this to actually go even higher. So the other thing I'm currently doing is looking at their website and basically looking at some of the data they provide. So they talked about in their last earnings, they talked about return to shareholders. So they're basically growing that dividend nicely. As you can see, they actually buying back their own shares. They're talking about having a strong cash flow. And I like this type of businesses, this type of business that actually basically they want the shareholders obviously to be happy in the end of the day, right? And obviously the fact that they had a strong free cash flow and they are buying back their own shares, they're paying you that dividend. To me, that's a basically healthy company. That's a great business that I want to see. Now, earnings per share is growing, free cash flow per share is growing, and then when you look, outstanding shares is actually declining, and total sales is going up the right direction. I mean, this genuinely, I feel this is a very, very quality business, and inshallah, I will be looking at this company in the next few weeks, inshallah, to add. Even if I start maybe just nibbling, just adding a little bit here and there, and then once it hits my actual price target, then I will definitely be buying. Like I said, if it goes to 250, I will be buying more of this company. If it goes below that, I will definitely be buying more of it. So you will definitely see this company in my portfolio soon. I've got portfolio update coming up, inshallah, this weekend. I've been busy, quite busy the last few days, but alhamdulillah, I'm okay today. I'm gonna, I'll be uploading a couple of more videos inshallah next couple of days, but yeah, stay tuned for that. I'm going to talk about the whole portfolio, what I've done. I've made some changes to the portfolio. I'm planning to make some more changes as well. There are a couple of companies that have been, J&J has been in the news, not for the good reasons again. So I will be looking at J&J. I will be looking at 3AM and so on. So yeah, I will be transparent. I will let you know these things. But if you're enjoying this type of content, please like the video, subscribe to the channel. We're gonna try to grow this channel as much as we can, and I wanted the community to share ideas and so on. So I've got a couple of plans, things that I want to do inshallah in 2023. There's a few more things. I've got a week of holiday coming up inshallah soon, so I will be working as much as I can just to kind of help the brothers and sisters out there. Just so if you enjoy this thing, whatever we call this investment journey, whatever, right? Please like the videos and subscribe to the channel, inshallah. Have a wonderful day. Assalamu Alaikum.